Good morning, good morning, good morning. Let's get started here in the stream. It's price obviously moving higher already. The market open. Gonna mark up our opening range here. I have not done that yet. Let's see this opening range that we're filling in here. We bounced off of this one. So I want to take that off just to have less on my screen here. Less on my screen, the better. So this is kind of what I have right now. We have our opening range right here. Got our opening range marked up. Back over to this time frame to really see what we have. Lock that in place. 30-minute time frame. So let's start here on the daily. Notice how we traded back down. Let's just take all this off down here. We traded back down into this rejection block down here that paired with this fair value gap that's down within here. We started bouncing off of that fair value gap, and now we're trading back up higher into this range. And obviously we're going bullish. Okay, I have this 4-hour fair value gap here that I marked up. I'm gonna take this one off. But I had that 4-hour fair value gap marked up here, and I got this volume imbalance that we could be possibly reaching into. So if we go higher, I want to look for this volume imbalance on the daily time frame to be met. We do have NFP tomorrow, but we also have Powell speaking today, so there could be some volatility. All right, I want to pay attention to all of that. We also have this 15-minute fair value gap that's resting up here, so that's a possibility to get into as well. So I want to watch all of this on my screen as we go throughout the day today. So if I'm looking for anything, I'm looking for buys today up into that range. Let's see, is my trade of it logged in anywhere? No, it's not. So I'll pull this over. I'm going to log into my trade of it. Alright, we're logged in my trade of 8. Here we go. So this really doesn't bother me that we're hitting this and now pulling back. I would love to see a pullback and then a continuation of some sort. Have some internal liquidity taken of some sort to keep going long. That'd be cool. So we hit that high. We bearish SMT at the highs now. We just closed this 1 minute. About to close a 2-minute inversion, actually. This is actually kind of interesting. So we inverse this 30-second here, and we had more SMT here. Now we're just trending down. I wouldn't mind seeing these equal lows taken. Okay, we're coming back down into the opening range. That's interesting. Because keep in mind, we opened here, traded down. So this is the low of like this opening range here. So all the way down into there. So I wouldn't mind seeing that happen. That looks like it's going to happen. Just trade right back down into there. So we had that 30-second inverse. And we inverse that 30-second there. So we had a higher high here, and then we inversed it right here. Targeting possibly down to here. Could even have entered that right there. So we hit that 4-hour gap here, and then we pulled back. I'm not entering this. I didn't do that. I would not have done that. That's not like my trading plan. But I'm just really gonna wait today for something clear. I'm expecting a consolidation anyway. We just hit a higher time frame. PD array. The only reason I'm live streaming is just to get more chart time. And for whoever else wants to learn today. That's really why I'm on here. So just pulling back down, we just inverted that 3 minute and this 2 minute was inverted. Came into this fair value gap, pulled back down. We're probably going to short down from here. We're back into the opening range. I would say target these lows into this fair value gap down here. Let's see if price wants to expand down on through into these lows, down into this fair value gap here. Lagging right now. Just traded down through those lows. It's down into that fair value gap that we had. So we were right about this process when we inverted this. And then started trading lower from here after hitting out that high. So they inverted that 2 minute, came back and retested, and then traded back down lower. It's just good to observe and watch how price plays out. We're looking for these relative equal lows. We had news at 8:30, so right here's 8:30 data lows there. Let's say you got in here, you had a little bit of drawdown. Right there. We do a standard deviation on this. 8:30 here. Standard deviation down to a -1. If you wanted to, you could just do the bodies, which would bring -1 right down below this low. And we're almost there. A little less than a 2-to-1. Just based on that inversion model from this here. We're speaking about that as that happened, as this formed, down from the 30-second to the 1 minute to the 2 minute. Just wasn't comfortable taking that so early. Like I was saying, I'd rather take a long, to be honest. If we pull back into here and continue up, get some more SMT. Still early in the day, you know. So let's see what happens throughout the day here. I wouldn't say that's a missed opportunity. I'd say that's just something that wasn't that clear. Mental capital is the most important thing. Like, the narrative of price is bullish, as you can tell. Bullish order flow. We did just hit the high, so we got to pay attention to that. We had higher time frame liquidity. We just got to focus on our execution when a trade does set up. We got to realize what conditions we're in. What time of the week is it? What news events we have tomorrow. What have we been doing all week? So we start out at Monday. Monday started here, pulled back down. Wednesday. So if we look at the weekly profile here. Started here Monday, pulled back, came up on Wednesday. Thursday. What are we going to do? Took out Wednesday's high. Are we going to come down down below these lows of Tuesday with NFP? Or are we going to continue to rise today or consolidate today, pull back, and then Friday continue back up to get that Monday high? Because we usually don't see Monday highs of the week. We usually don't. And we had one the other day, and that was like the first one in over like 150 days or something like that. Because where was that? It was over... Yeah, it was this Monday. And the high of the week. Friday ended here. Usually we don't have Mondays the high of the week. Holy shit, it's got a notification on sand. So what are we doing here on DXY? We're trading down lower, lower, lower. Looks like we could flip and go bullish at some point. If we flip back around, that would be bullish. Well, bearish for the... If this goes bullish, it's bearish for the indices. That's not that big of a deal. We'll see how this order block plays out here on DXY. All within this area. We could reach up to here, which would be a little bit bearish, but then start to fold back over again. We'll see how that starts to play out. I'm not really too interested in that. I don't need to use DXY. So we just pulled back into that fair value gap here. Took out that low. Hit that standard deviation. Do we have bullish SMT? We inverted this 30-second, which I wouldn't want to trade that anyway. We just closed that 1 minute here. We do have bullish SMT. We didn't invert this 1 minute. So we took out the swing lows, and we instantly inverted this 30-second here. Now we're about to invert that 1 minute here. Get the 2 minute there, but we're bouncing in between two of these. I wouldn't be surprised to see it rip up. It's not part of my plan because we got two of them, right here and right here. Even this 30-second wasn't that clean, but this was valid. I could have taken this, but I wasn't paying attention. Looking up to here. Macro just started. There's no wick there, so we could possibly reach to that. But yeah, like I was saying earlier this morning, I would like to see a swing low met, and then a continuation, and we are getting that. I would have liked a little bit more consolidation down here. We just got a 2 minute inverse here. We have yet to hit these highs up there. That's just too much. That's like 70 points right there, and I'm not looking to risk 70 points on a trade. That's way too much. But yeah, getting in down there is a little bit riskier. Just want to keep paying attention to what we get within here. We have this 2 minute inverse. So we just close that 2 minute there. Pretty nice. Let's say you got in right here. Wouldn't want to see that low made. I mean, there's 30 points on that one. You go back up to this PD array. Bounce off this order block. With this breaker here. Yeah, I'm sitting on the sidelines for this one. But let's wait for more information on this. Yeah, we're dipping down here in this fair value gap, and we're staying higher here, so this might actually just really just rip on through. If this rejects here on YM, we stay here, we might just rip on through here. The 5 second fair value gap playing on. See if we keep this 5 second fair value gap here and keep going higher. Looks like that's what we're doing. Got that high here. Yep. 5 second gap for the win, baby. Let's go. See, we're making lower lows and higher lows. That's bullish SMT there. We're already bullish. Tape reading this one here. Wow, this is actually crazy how much movement we're getting here on the day before NFP. I wonder if I have any data from last month. Let's see here. What? I definitely do. What? It's not loading? No, I didn't take anything on that NFP. Neither I don't know over there either. Huh. I'm gonna start putting data in for pre-NFPs. So yeah, we haven't hit the high in any of these. Now we've had a 4-minute inverse. I just don't like how it's... There's just something about it. I don't like how it's moving. That would have been a killer buy down here at the 30-second inversion, though. Because we had that... We did have that SMT on the 30-second wicks. I just didn't notice that. And then we had... I wouldn't even say bullish SMT, but it's really not that bad. Came up to a rejection area, rejection block here in the 5 minutes, 30 seconds is inverse this. Now we're bouncing back up to it. Taking out this swing low. Let's see what we're getting here. I wouldn't trust that, but getting up to here, it's possible. If we keep going long in this area, I want to see this 5-minute close, hit this for value gap, and give me something from there. Or to just trade down lower and buy up from down there. So we'll see what happens. Let's see. Give me 1 second here. It's not gonna let me. What the fuck? Why does this let me log in? You're telling me I don't have any? That's bullshit. Yeah, that is so bullshit. Okay. So we should have Powell speaking soon. I think that's what's happening now. Powell testifies. He's just gonna say some more bullshit, just like yesterday. He should send the market higher. Bullish SMT. Playing off this range. Bounces out this 3-minute for value gap that's over here. Let's see what we get there. Does my OneNote just not work? What the fuck? I don't know, man. Looking at Uniswap here. So it's actually not looking too bad. I don't think we should fall 50%, but I think there's a good possibility this could run from here. 400% move. think at the least 100% move. This would be 2. $8,000 profit. So DXY still moving lower. That's a good sign for continuation down. Where could we be moving to? We could be moving towards these lows down here. I want to pay attention if we get an inverse of this level or not. Continue to get lower lows here. This might just be a boring day as expected, you know. Paul testifies. Fed Paul speak.
Suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's open, unsecure, and unsafe southern border. Because of President Biden's policies, we've seen over 7 million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country. So we cannot have an honest conversation about the benefits of legal immigration in our labor force without also addressing the elephant in the room. Our country is strained. Our economy is strained under the weight of illegal immigration. In fact, recent reporting has highlighted that cities and states across our country are struggling to keep pace, and some have been forced to cut public services to Americans in order to fund the cost of feeding and housing illegal immigrants. One clear example we saw in New York City were the poorest kids in the city, minority kids in the city, were stuck at home because the city was using the schools to house illegal immigrants. Another example, the city of Denver recently announced that some of its employees may have their hours cut in order to reallocate funds toward the city's migrant crisis. How in the world is that fair to Americans? It's not. We must get the illegal immigration crisis under control, because if we don't, our local economies will continue to be crushed and opportunities will continue to be stripped from our citizens and their families. Finally, as if inflation
This is disgusting.
and the negative impacts of illegal immigration were not enough, the tsunami of regulatory red tape coming from our financial regulators further threaten economic opportunity across the board. For months, we've heard bipartisan criticism.
I'm just waiting for Powell to start speaking right now. These markets are just shopping around, shopping around.
For those who need it the most. I was certainly pleasantly surprised to hear your comments about Basel III and your thoughts on its future. When 97% of the comments that you receive are negative, that's good news. Good news for the American consumer. Good news for entrepreneurs who would like to start a business but do not have access to capital. Perhaps even good news for millennials who would love to become a first-time home buyer. The opposition to Basel III comes from diverse array of interests, from community leaders, farmers, to housing groups. We've even heard opposition in this very room, on this very committee, from Democratic senators. I look forward to hearing your testimony and looking forward to asking some questions as well.
Thank you, Senator Scott. We'll hear today, as we do every 6 months at least, from Chair of the Federal Reserve, Jerome Powell, on monetary policy, the state of our economy.
Holy shit.
Please proceed. Thank you for your service to our country.
Thank you, Chairman Brown, Ranking Member Scott, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report today. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward
here we
these
go,
objectives over the past year.
Finally.
While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
Very caffeinated right now, Powell.
The FOMC is strongly
Very
committed to
caffeinated.
returning
You better
inflation to its 2%
give me something good here.
Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all.
It's like we've said that every
I'll
single
review the
time.
current
I hear
economic
you.
situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% inflation objective is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress that we've seen in inflation, and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thanks, Chairman. You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is, if what we expect and what we're seeing is continued strong growth, strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs. This town too often seems to forget that maximum employment is part of the Fed's dual mandate.
There we go, right off that Fair Value Gap that I've been watching here.
Senator Scott mentioned that last year's bank.
So we're watching this Fair Value Gap. As we hit this low, we shifted, retested it. This is just the sixth sister approach. We came down, shifted up, we retested here. It was actually on a 2 minute. I just wasn't interested because we already hit the high here. That'd be against my rules to take that trade. Even though I was looking for buys, we don't have a wick on here.
So this is a very broad area of work.
Just observing this price action, you know. I don't need to take it if it's not clear to me.
System who are involved in supervision, thousands of them, and there's a rule book, and so there's been careful study. This is work.
All right, we're going to continue just to keep watching price here.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses with the Federal Reserve. I wrote you last month asking the Fed to identify substantive penalties for board officials who violate the trading rules. Where is that in the process? And I expect these rules in place before the next monetary policy hearing in 6 months. Where is it?
We had our own Inspector General gave us 6 things to work on. I read the list.
So we got a 1 minute for value gap here that we could inverse.
I just said we're going to do all of these.
I know we just hit a higher time frame PD right here. No, bearish SMT with YM. And we have relative equal lows down below. I don't necessarily want to go against the trend, but I see that we have no wick here.
Algorithms that combine competitors' price information to engage in what they call.
I think we could reach down to here. I think that's possible.
You know that corporate PR teams worked hard on this. Just another way for corporations to make it harder for consumers to seek out lower prices and to pad corporate profits. Are you concerned that the wide adoption of these price gouging strategies, these pricing schemes, if you will contribute to inflation?
I think it works both.
I would like to watch this
Say that
30-second inversion right here.
trend and we're monitoring it. Remember that prices go down when there's no one in the
If we inverse this 30-second,
people if you're doing dynamic pricing. Same thing with the
I wouldn't mind seeing this trade down to
both ways. I don't know that
this 5-minute no wick candle right here.
inflation, it would certainly have implications for consumers who need to be.
I think that's possible.
You think
I think we could get that.
this kind of surge pricing might lower
We
prices
filled in that 4-hour fair value gap exactly.
My understanding is that the idea is that in slow periods, prices actually go down.
Oh, there actually is a wick on that.
Busy periods they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think
Take a paper
inflation
trade on this
mechanism
one
is
here.
incredibly important in our economy. I think we need to give.
I would like to see that go
freedom to
lower,
do that
to
as
be
long as
honest.
they're
We haven't hit this low
fixing
yet.
Prices or failing to disclose the nature of the price changes to the public.
I have a few seconds. Research has indicated constrained supply was behind a significant amount of the inflation
Playing this
we've seen
breaker
over
here.
the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound.
Reversed.
When the labor
Closed.
shock that we had unwound as well, we saw inflation come down very
I
quickly.
think we can keep going lower a little bit.
But it's also down to, tight monetary policies playing a role as well.
Which leads me to the plea with you to speak out about inflation, about the contribution of.
Want to see how this plays out. I'm not going to enter it on the eval yet. Even today, I'm only going to trade micros on the eval.
I know you are done. That's true. Well, that's
See yourself agreeing with me more and more often. Is that what it
that would be a nightmare, and I'm awake. So,
I'm going to hit out on this one.
it's that the fact of the matter is that so often
I'd rather, like, if I get hit out on this one, this is just a paper trade. Get hit out, wait for another setup, see if it forms again. This is just based on the 30-second inverse right here.
can't afford a.
Okay, paper stop out right there.
I can't imagine how the average millennial affords a down payment or a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future, fixing and repairing or having a plan for obsolescence that happens for every homeowner in the country. So I think the issue is far more complicated and would love to delve into that over the next 4 minutes and 18 seconds. But my first question is a combination between the challenges of illegal immigration and crime. It seems like every single week there's another story of another city underwater attempting to feed and house millions of illegal immigrants, and American taxpayers are footing that bill. Like I mentioned in my opening statement, just recently in Denver, we saw city workers having their hours
3-minute rejection block here.
essentially zeroed out so that the city can allocate more resources.
This 3-minute close like this on YM. Oh, that's a 4-minute.
In San Francisco, they say
Okay,
that
3-minute too.
the average cost between
That'd be pretty
San
bearish, but we'll see.
Francisco
4-minute, 5-minute looks bearish.
is almost $4 billion. Couple that with in New York, you see Governor Hochul bringing out the National Guard and the state police to help reduce the impact of crime at the same time. Affairs from illegal immigrants in the city, devastating the economy, scaring the citizens, and reducing the opportunity for business as usual to return to New York City. So my question is, can you explain how our economy is expected to continue shouldering the burden and the costs because of illegal immigration, and what, if any, information do you have as it relates to the impact of this surge of crime in our major cities on
Holy
the
shit.
economic outcomes of those cities? Because I heard the discussion that when you have more folks in the store, you have more shoppers. Except for these days, when you have more folks in the store, sometimes they're just there to steal.
So quoted my statement earlier, and it was an accurate quote for which I thank you, but I would say right before that, what I said was immigration policy, very important, very much under discussion, and it's none of our business. We don't set immigration policy and we don't comment on it. So,
but you commented on immigration. So my point though is that when you're going to tell a story, please tell the whole story, especially when the nation is frustrated by nearly 10 million folks by the end of this year coming into the country and having the kind of negative impact on.
So it looks like we're about to inverse this 30-second now. We got 11 seconds left.
Americans, especially Americans living in the poorest parts of America, face on a daily basis.
So, as you accurately quoted, I was referring. I said over time, so I was referring to the history, which with you agreed. So
we inverse that 30-second there as we hit this high. So we had equal highs up there.
For us, we're independent. We like to remain that way, and the way we do that, one of the ways, is by staying out of political issues that we really aren't assigned. And so the kinds of issues you're talking about are very, very real. I don't deny that, but they're really not for us.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated with those illegal immigrants, nor do they.
That's crazy.
The impact on states like New York or California or Illinois, where the devastation of crime ravaging the poorest Americans has an impact. We don't.
I like this guy, Mr. Scott.
We do, and so does the Congressional Budget Office. We do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office has, as you probably know, a detailed assessment of all the things like that. We don't really have a way, and we do look at the finances in the aggregate of state and local governments. That's in the hiring that they do.
Okay, it looks like we might go bullish here, though.
But we wouldn't do
That's why I stayed out of that.
Assessment like that. I mean, CBO would.
Those relative equal highs up here. We just inverse this 30-second for bullish movement now. We hit this low.
Before I begin my question,
bullish SMT.
That in the past year,
lower low. Wouldn't mind seeing this go a little bit higher here.
And the first ever Latino
I'm only paper trading today.
These are historic milestones.
We inverse this with 1 minute here. 1 minute order block. We should stay up above.
To the leadership of our economic institutions. So I want to applaud that. And Mr. Chairman, I hope that progress can continue and extend to the rest.
That'd be awesome if we can get a continuation on the day here.
Thank you.
Based on this 30-second
I agree with my
inversion
friend, the ranking member,
from here.
When you tell a story,
we shifted
you
there.
should tell the whole story. Mr. Chairman, are you aware of the Washington Post February 27th article?
So now we just hit the high here.
It says the economy is roaring.
From here, not up here though.
Immigration is a key reason.
I don't recall that, but I would have read it.
Let me read it to you. Immigration has propelled the U.S. job market further than just about anyone expected, helping cement the country's economic rebound from the pandemic as the most robust in the world. It goes on to say economists and labor
So we should stay up above this fair value gap if we're going to continue to go long.
Ultimately key to solving unprecedented gaps in the economy that threaten the country's
Which looks like that's what's going to happen today. I would say this order block should hold if we're going to go long from here.
Take issue with those statements?
You know, there are a lot of adjectives and adverbs in there that you wouldn't see in Fed world, but the
take out the adjectives and give me on the substance.
The story is I think broadly this. It is that
3 minute looking very beautiful in that closure.
The size of the workforce last year, and it was happening all during the year, and we were wondering what it was. And the answer was it was really two things. It was labor force participation, but it was also immigration. And if you look at the Congressional Budget Office numbers,
that's not what I wanted to do, but
because there was a lot of growth.
We'll see how this plays out. 3 minutes.
Bigger, and those are
we might just get a reaction off that.
This is without making any judgments on immigration or immigration policy, but I think that's an economic
fact. I'm not
fact.
suggesting that. I'm just suggesting the facts are that we had 10 or 11 million jobs that were going unfulfilled in our economy.
Okay, I took 2 micros on that. I don't think we should come back down below this low, but I'm also paying attention to this 30-second fair value gap. I want to allow price if it wants to come back into that fair value gap to go long. I'm only trading these micros because look what day it is, you know, and yeah. It's
So I agree
Thursday, the day before
what
NFP.
is necessary
I don't
to
really want to
regularize
push something
order.
too hard
I
here,
also think that just
but
to create
I'm expecting these highs to be ran.
the context of immigration
Go to the -4.
as a scourge is absolutely
Basically Monday's
Let me
high.
turn to another question. In my view, the sticky inflation
Sell them
we've
both
been
up there.
seeing in the housing
Probably hit up
sector
there either
is
today or
principally
tomorrow.
due to the massive
That's where I'd
nationwide
expect price to
housing
go
shortage.
to. Obviously, it wouldn't
The
be that
Fed's
much. It's only
monetary
2
policy
micros.
report attributes the shortage to restrictive zoning, high interest rates,
140
and tighter underwriting by
points.
banks. I would also add to that list underfunding of key HUD programs that shore up and expand our supply of affordable housing. If the housing supply shortage continues to grow, are we likely to see continued housing inflation?
Yes, we are.
And housing is already becoming less and
I don't
less
care if this
affordable
one hits me
for
out,
low
to be honest.
and middle-income Americans. According to the National Low-Income Housing Coalition's 2023 Out of Reach report, a worker earning the minimum wage in New Jersey would have to work 2 full-time jobs to afford a modest one-bedroom rental home at fair market rent. Do you agree that increasingly unaffordable housing is a problem for the economy?
I think there are two things going on. One is a longer-term housing shortage, and the other is the pandemic effects and the associated higher interest rates, which are things that will pass through. When all that passes through and rates are normalized, we'll still have the underlying housing shortage, and it's going to be causing upward pressure on housing prices.
Now, the Monetary Policy Report noted that, quote, home purchases by low-income households have fallen disproportionately more because mortgage lenders impose maximums on the ratio of a borrower's debt service payments to the borrower's income. I'm worried about how this dynamic will
That 5 minutes closing pretty good. I like that. We just opened bullish now.
According to analysis from the Urban Institute, would disproportionately increase the cost of mortgages for Black,
Let's see how this continues to move now.
moderate borrowers. Given this, isn't there a risk that if the capital rules implemented without changes,
We're still
that it
very
could
low
make it
here.
even harder for disadvantaged borrowers to obtain home ownership?
There is a risk like that, and we're very focused on it.
And hopefully you're working to mitigate it.
Yes.
Thank you. Thank you.
Obviously, it's best to wait for the highest probability setup.
Senator Rounds from South Dakota.
Thank you, Mr. Chairman. Chairman Powell, welcome back. Look, first of all, I've appreciated
Holy
the
shit!
approach to
We
this
got pulled back
session
right away at the
this committee, and
the
I understand
not the
your
8:30,
desire
the
to stay
10:30
as
open.
neutral as possible with regard to the politics.
Not really
involved
surprising.
in an election
We
year.
could pull back down below
I
all
do
those
have
relative
some
equal
questions
lows and then continue back down
specifically
lower.
with regard to the Basel III Endgame proposal.
All right, I'm
Analysis
done
of
watching
that
this.
proposal, found that
Done with this. I'll be right back. Alright. Let's just keep watching price action as we play around in here. See, like I said, we're back into this 30-second for value gap. I think I have my stop. My stop was like right below this. It might have just hit it. Oh yeah, barely tapped it. That's cool. Only 60 bucks. Yeah, as like I said today, not really too worried about this as a whole. Market's going to be very, very manipulative today. Not really too interested in it. We could even see a pullback down below all this low resistance. We hit this high up here. We could easily pull back down now. How's crypto doing today? Higher high, lower high. We could easily flip around here on crypto too. How's this doing? Still moving lower here. It's good. If this is gonna go long. Yeah, that's actually crazy. It barely just hit me out, and then it just rips. Word up. Because I was here for let's see. I thought I had it below that, but so from here to here, so 14 points is $60. So 140. That would have been $600 on that one. 1.02 is $600 win right there. So we just inverted that 30-second again. Should we do it again or should we not do it again? That's the question. Because we just traded down lower on that 30-minute. We came down below this low. We didn't here. We still have bullish SMT. We're obviously still bullish, you know. We just came back down into this order block. We inverse that. I'll just stick to my rules. I'm not taking another one on the eval. I'll stick to the rules today, you know. It should be every day. Oh, that's too big of a win. $1,700 if it rips up there. That's too much. We're gonna put our standard deviations on here. Probably gonna hit out. Damn, I thought I had to stop below that low though. I took that out. I did. Good. Took that out. Man, I'm fucking hungry. Yeah, imagine trying to press buttons in this on your accounts. You could easily blow your account on these days. You got Powell speaking, you got NFP tomorrow. Why not just wait for a good opportunity tomorrow after the news? Oh my gosh, it's so funny. Bull run. Super. Holy shit, scared me. There we go, bud. There we go. Let's just be happy. Shits and giggles, take one off. Break even this bitch, we hit all-time high. Not all-time high, just today's high. I think we're gonna keep ripping though. Let's keep it going, bud. Take one more off at this high here, bud. And we got, was this a 1 hour gap or a 4 hour gap? Can't really remember. 1 hour gap. Take another one off there. So that'd be taking 2 off. Take another one off here. So 1, 2, 3. So that means you leave 2 open. Let's actually take 2 off here. And then let's let the last one go. Up to the Monday high. Because I really think we're going to hit Monday high. We usually don't have Monday high of the weeks. So, I think today's a pretty good setup for that. There we go. There's another one taken off. Yay. Cool. Wah, wah, wah. Barely hit my stop loss here. That's annoying. That's really annoying. Is what it is. I don't really care. It'll be a better opportunity tomorrow. Setups will be better. Way better. Very clean. So super. So if we get to $7.50, which I'm thinking here. Just doing some math. 400%. It's probably gonna reach there. Sad to say it, but it probably is. Cool, cool, cool. It's there. Also 2 here. So 1 there. It's the last one up there. Yo, that's wild. Because I was like, this low should hold. Because of that. So I took the buy up here based on breaker, the closing. Everything like that. Well, it's because of the inverse. Go over to the inverse here. I took the buy based on that inverse. And we came down to hit break even. So dumb, bro. 30-second inverse. So entry here. Stop loss here. down below this fair value gap. Yeah, did TP just get hit there? Oh yeah, just 2 more got taken off. Cool, cool, cool. Now I should let the rest go. See where that goes with us. Now let's see what happens. It was bullish. Crazy, man. Like, yeah, this thing's gonna rip. So we had that 5-minute closure there. The new one opened, traded down into the fair value gap here. The wicks had the SMT. There we go. They had that order block that was there. Oh my gosh. Easy money. Easy money. Yeah, just notice that order flow all the way up. Came down below this low here. From market open, was that? Yeah, we came back down to the opening range, obviously. It's probably 50% of it, too. Nah, not quite. But still. That's a nice move right there. It is what it is. And we also had this. We had SMT at these wicks here too. Pretty sure I was mentioning that in the live stream. Go back and rewind it. Yeah, there we go. Nice. Nice, nice, nice. So that would have been 120. Not even worried about the money. I'm just focused on the process here. Could care less about that little bit of a stop loss. On a day like this, or should just be tape reading anyway. Basically am. That's why I did micros. I'm gonna go back and watch this recording later because that shouldn't even have hit. But yeah. Leave it as that. It's probably just gonna keep trending up for the rest of the day. Closed up above that 1 hour gap now. Might just continue up on through now. 15-minute closed it. Carry on through, up on through in that range. And if you really wanted to, you probably trade these lower time frames. You're savage if you do that. Maybe just hit this low here, shift it up higher. Probably long that there. Yeah, I think I'm gonna call it quits for the day. I got more work to do. I don't really want to mess around anymore in these markets here today. Tomorrow will be way better. I didn't plan on live streaming today, so I know tomorrow's will be better. I'll definitely live stream tomorrow. But take it easy, guys. I love y'all. Peace out.